Welcome back to the portfolio, everyone. And today we're going over NIO, the Chinese electric car manufacturer who is rivaling Tesla right now. They are seeing a huge amount of hype over the past 6 months, and they're actually talked about as being Tesla's #1 competitor in the electric vehicle space. If we take a look at their share price, you can see here over the past 6 months, the shares are up around 300%. So huge surge in share price over the past 6 months. And of course, this company has seen a huge amount of hype. It's been talked about in the news through a bunch of different headlines, and they just released their numbers for second quarter deliveries. So we're going to go over their financial numbers, how many deliveries they were, the overall income statement, balance sheet, and we're going to talk about and determine if it's time to jump into NIO and if they really can be Tesla's main competitor. So if you don't know what NIO is, they are an electric car company. They are only located within China and they only operate within the Chinese mainland. Their CEO has come out and announced that he plans on expanding the company in the coming years. But as of right now, they are local only in China. So they have no direct competitive with Tesla, who operates within the US right now. But of course, NIO has gotten a lot of hype as it could potentially be Tesla's next big rival. So of course, in the news, there are a lot of electric vehicle companies out there right now who are receiving a lot of hype and seeing their share prices grow dramatically. But a lot of those companies aren't actually delivering any products yet. A lot of them aren't really generating revenue, and they're all strictly hype behind them. NIO is a little bit different, and I do believe NIO could be somewhat of a competitor to Tesla because they are actually delivering cars right now. They are actually producing and distributing cars to the public. Consumers are actually driving their vehicles on the roads, and they're actually seeing nice growth in their deliveries. So before we break down NIO and determine if it's a buy, I am going to ask you to please like and subscribe. I'm the Gen Z investor, and every single day I come up with new videos that talk about different stocks you can buy, overall stock market performance, and any other big news and headlines within the stock market. So today we're going to go into NIO. Seeing a huge amount of hype. I actually got a couple comments requesting me to talk about NIO. So we're going to do that right now. And you can see here that NIO vehicle deliveries almost tripled in June and in the second quarter of 2020. So the Chinese electric car producer NIO reported that vehicle deliveries nearly tripled in June and within the second quarter. So if we take a look, NIO delivered over 3,700 vehicles in June. And in the overall second quarter, they delivered over 10,000 vehicles. So when we compare this to Tesla, Tesla delivered over 90,000 vehicles in Q2. So of course, they aren't at Tesla's level yet, but they are really far ahead of all these other electric car vehicles you hear in the news who really aren't delivering any products to consumers yet. Those are companies who are just still innovating, still developing products, but haven't really sold many. At least NIO here, you can see they actually delivered over 10,000 vehicles in the second quarter. And this 10,000 deliveries actually doubled what they did in Q1. So overall, for the entire year 2020 so far, within the first 6 months, they delivered over 14,000 vehicles. So again, not close to Tesla's numbers, nowhere near Tesla's numbers right now, but much farther ahead than a lot of other of those electric car companies we're hearing, and we're seeing their share prices grow. So NIO at least has a little bit of backing behind it. They have some sales under their belt, and they're actually proving that they can generate, produce, and distribute their vehicles to the public. In June, the company delivered 2,400 ES6s, the company's 5-seater vehicle, and over 1,200 of the ES8s, the 6- and 7-seater models. So of course, you can see historically high of monthly deliveries, and each and every month they are actually growing their deliveries. And of course, we saw Q1 to Q2 saw a nice, beautiful growth where their deliveries actually doubled. So a lot of potential from NIO, and I really do believe and understand why a lot of people are saying this could be Tesla's main competitor, because they are actually delivering vehicles. If we take a look at their share price, you take a look on the last 6 months, you mentioned that there's over 300% growth in share price. But if we break it down to the last 5 days, you can see here in the past 5 trading days, their share price is up over 35%. And overall, you can see this company was higher, saw a nice dip over the past couple of years, has fully recovered and reached new all-time highs. If we take a look from Market Watch here, it kind of breaks down exactly how the company's performed. And considering this is a complete growth stock, they do not pay a dividend. This is the total return for the share price. On the 1-month chart, it is up 145%. 3-month chart, it's up over 460%. And of course, on the 1 year, they were up 334%. So absolutely huge, huge returns from NIO if you bought in when it was cheap, around $3 a share. Of course, this still is a lot of a hype stock. We're going to go over the company fundamentals to determine if they deserve the valuation they have right now. current market cap at around close to $18 billion. And if I want to put this in perspective, Ford Motor Company has a market cap at around 25 billion right now. So for this company, NIO, who has only delivered 14,000 vehicles year to date, and they have a market cap that's somewhat close to Ford, who has been an established motive company within America for decades, that just shows the amount of hype that's really backing this type of company. And of course, if this company can reach Tesla's delivery numbers, if it can become profitable in the next coming years and go from 10,000 vehicles year to date right now to up to 40, 50, 60,000 vehicles per quarter, then of course this company could actually compete with Tesla. And if they can have a good job expanding into other markets outside of China, then who knows, this company may actually compete with the big boy in Elon Musk. So I'm going to jump over to NIO's website first before we go over the financial statements and just take a look at what they have to offer. So currently there's 3 vehicles listed on their website. The ES8, which they sold the most of. You can see here this nice luxury SUV. The NIO ES6, another model of their SUV. And the last one is the EC6, a little light mode, another model of their SUV. So of course, all 3 of their vehicles are SUVs. They do not offer any sedans or cars or pickup trucks like we see with the Cybertruck coming out from Tesla. But of course, they only have 3 products line, which one of the reasons why they are lagging behind Tesla, I believe. Tesla has, of course, numerous different models, and they are expanding their product line, and NIO has not done that just yet, so it'll be interesting to see what they come out with next. Overall, they do have a very nice website, very modern, very nice design. It really gives you option to go through each of the vehicles and learn a bit more about them. Overall, nice website. The next thing we have to do is, when we're taking a look at these young companies, we got to take a look at their financial statements. It's, of course, we see a lot of people who just buy into the hype, who don't even take a look at the company, don't read an annual report, and just all they do is throw money into it because they saw like someone like me, like a YouTube video or something on the news talking about them, and they don't even take a look. But you really want to take the time to actually read through financial statements. They're not too complicated once you do a couple and actually understand what they say, and we're going to break them down right now. So one thing that's very good to see from NIO, of course, still trading around $15 a share, is that they are actually generating revenue. For a young company who's all in the growth stage, they are bringing in revenue each and every year, and around trailing 12 months of over $1 billion worth of revenue. With regard to net income, they are actually not bringing in any net income right now. They're actually losing money each and every year. Of course, 2 years ago in 2018, they lost over $3 billion. Then they got a little bit of improvement here. They lost $1.6 billion in 2019. In the past 12 months, they've lost less than $1.5 billion. Of course, when I say lost, they have been using all their money, as much money as possible, to reinvest back into the business and to actually grow operations. And of course, that money is, of course, going into research and development, like improving their manufacturing process, and of course, all the other things that goes with building an electric car company. With regard to their income statement, you can see here that's nothing crazy. They are at least generating some revenue, which is nice to see. And of course, as these deliveries start going up and sales start going up, their revenue numbers will continue to trend upwards. If we jump into their balance sheet, this is one thing right here that I find very important for young companies. You really want to make sure they have the funding to maintain operations. Starting out a company like this is very capital intensive. They will be selling a lot of stock. They have been selling out of stock, and the government of China has actually helped with some funding in order to maintain operations and continue to grow. But you really want to make sure this company can survive on its own. You cannot rely for a long time always selling shares and always generating income from other sources. You want to make sure that has some foundation behind it. So we take a look at their total current assets. They have close to $900 million of total current assets. Meanwhile, their total current liabilities are over $1.7 billion. So a very bad current ratio, very extremely low current ratio. They may have some difficulties paying this off. They will probably have to issue more shares to the public to generate more money in order to pay off this debt within the next 12 months, but we will see what's going to happen with that moving forward. Overall total assets of over $2 billion of total assets. Meanwhile, their total current liabilities and total liabilities overall are over $3 billion. So once again, not a very good overall ratio, much less total assets compared to total liabilities. With regard to total equity, you can see here total preferred equity at around $3 billion, and total equity overall is not very nice, in the negatives, which is not good to see. You really want to see those numbers growing over time, and seeing a decrease is not good to see. And their balance sheet isn't the worst, but of course is nowhere near perfect. From a company that is growing quarter over quarter, year over year, This isn't surprising to really see. Of course, I'm sure they will be issuing a lot of stock to the public to generate income. They will get funding from other private sources in order to maintain operations. And if this company can actually continue to generate revenue and grow, then it may be a nice viable option. It may actually come up and compete with Tesla and all the other big boy electric vehicle manufacturers. Now we're thinking, is NIO a buy right now? Is NIO a fit with their portfolio? Reading these headlines talking about how they've actually grown and tripled their delivery numbers, does that mean it's time to buy? That is really up to you. For me personally, I will not be purchasing NIO. I don't go for any hype stocks like this. In my opinion, I'm not there yet. It's not at a position yet for me to actually jump in, only because I understand China is an extremely large company and an extremely large country overall with a huge population. But for me, NIO is not right. It doesn't fit my personal investing guidelines and my personal investing standards. But of course, there are a lot of investors who can invest in NIO, who believe in the company, who actually think it is a good fit for their portfolio. And absolutely, by all means, if that's what you do and you research the company and that's what you decide, go right ahead, invest in NIO, do whatever you want. Do I believe $15 a share right now is the highest NIO is ever going to go? Of course, I don't know for sure, but I'm going to guess not. If I had to put my honest opinion and a straight up guess on my thoughts about the company is that if they're able to continue to grow deliveries, each and every quarter, if they are able to double, triple, 50% growth in deliveries, whatever it may be, quarter over quarter, year over year, then I do believe the share price over the long term is going to go higher than it is today. One thing I am going to try to stress to investors is that a lot of electric vehicle companies have seen this share price grow over the past month. This chart is shown on Tesla, Shell, Tortoise, a lot of other electric car vehicle companies right now, Workhorse, they've all seen their share price grow dramatically over the 1 month because a lot of people are talking about them. There's a lot of hype backed behind them. So one thing I would like to say, if you do choose to invest in this company, please go in with the mindset of long-term growth. Do not do this for a short-term. I personally am not really much of a short-term trader type guy. Of course, maybe you can make a lot of money with this. By all means, go ahead. But one thing I'd like to keep in mind for people who are long-term investors, if you are to purchase NIO, I do believe it's going to be quite volatile over the next 6 to 12 months. I do believe we may see another little bubble burst in electric vehicle companies. I'm not saying this company is going to go to zero because no one can tell that for sure. But in my personal opinion, if you really are going to buy NIO, hold for the long term. Don't be stressed out if the share price fluctuates very volatilely in the next short term, 6, 12, 18 months. If you hold for the long term and NIO can continue to operate the company and generate net income over the next 1 to 2 years, then of course it may be a great buy for your portfolio. So overall, that was my thoughts on NIO. Thank you for tuning in. I will see you in tomorrow's video.